As a start, the consolidation extension is native to SAP Analytics Cloud. What I wanted to develop is something that will be purely integrated or part of a content of SAP Analytics Cloud. I didn't want to create something that sits externally and communicates with SAP Analytics Cloud, because then you have the integration, and SAP Analytics Cloud every 3 months has a new wave, new updates. And that can cause some disruptions in some cases, and you need to keep on ensuring that the two systems work. So this is content that works natively on SAP Analytics Cloud. That's one. Two, we extend it by having custom widgets, because we just need some applications for the user interface so that they are able to interact with the consolidation as a solution and not only as a logic of elimination, because consolidation is a total system, okay, that enables, empowers the finance department in aligning all of the subsidiaries and affiliates and the activities that are needed to conduct financial consolidation according to IFRS or GAAP with all of the functionalities, meaning you have to have journals, you have to have intercompany matching, you have to have a consolidation monitor. So these interfaces are essential for the work required to conduct consolidation, and not only just elimination of intercompany investment and these things. So this is an interface. Every single part that you see is all customizable, because this is all enhanced stories, right? With a lot of nice JavaScript. So we have on the left side, we have the menu, and we can jump into any of these parts. Dashboards, you can get to see all of the dashboards that you have. We call them dashboards. These are enhanced stories with a good amount of JavaScripting. So if I click on something here, it will open up in this interface. It will be an embedded interface. So if I click on Central Dashboard, I hope they didn't mess around now, because I'm showing you the demo version, and we're always enhancing on it and adding more features, meaning you'll get to see that the consolidation monitor is going to be released in about a month. This is a new release, and we will have other releases. So when I click on anything from the left side menu, it's going to open up in an embedded mode. One note to say, we have a very small server. We have a demo server. Now, this is actual data for a customer that we changed. 73 companies, roughly 12 indirect level, 12 subscopes almost, a total of 20 plus scopes of consolidation, multiple currencies. And when we click, it's generating over 400,000 records for the consolidation. Of course, the heaviest part of the consolidation is currency conversion, which is native to SAC, right? So when they start saying that, does SAC handle a massive amount of data? Well, the heaviest amount of data is native to SAC, which is currency conversion. And we do currency conversion even in memory, because you have the converted number, or the measure, sorry, converted measure. So it does handle all of the data, because the elimination afterwards is only 20 to 30% of your data records, right? So going back to this, we have all of the dashboards that are something like so. We can interact with it. You can change the report, jump to, let's say, graphs. These are standard that we deliver as starting point, okay? There are many things to it, meaning you can export. This is all made user-friendly so that they don't learn about how to use SAP Analytics Cloud. So they can export to a PDF, Excel, CSV, PowerPoint, we're adding it, change the settings, run every single data action trigger that they need, or jump to any kind of interface. So it's a unified interface for the consolidation manager to do whatever they want from one report, okay? Now, going back to the landing page. So this side includes all of the shortcuts, including configuration that I'll reach later on. Meanwhile, the lower part let's say, categorizes the activities. If I click on import data, I'll be moved to, or I'll see the set of activities and the reports for importing data. I click on data preparation, I will get to see the data preparation side. If I need to understand more about data preparation, we have blogs that we keep on updating with videos, with text, with everything, so that, and downloadable material, so that whoever wants quick access to some information, they can get that quick access to learn more about the solution. Instead of having multiple PDF files on newer versions, we just update that interface only. So we have the importing data, data preparation, currency conversion. If we click on currency conversion, we have the set of activities. But for now, I'm just going to go back to the home page. And the last part is the number of planning solutions that we have already developed that can be integrated with SAP Analytics Cloud, so that we conduct consolidation on it. So if I click on, let's say, ESG, you'll get to see a complete content for ESG. It's more of GHG calculation for now. If I click on activities and emission portfolio, for this customer, they wanted to calculate all of the greenhouse gas emissions based on multiple scopes. But they also want to consolidate these values based on the percentages of ownership. So there is a report for it, which is the GHG emission consolidated dashboard. Okay. If I click on that one, also, I'll have the calculated, okay, maybe not this one, maybe this one, because they're messing around and they're changing things now. So the consolidated greenhouse gases, you can start seeing per entity. What is scope 1? This is related to the reporting standards of GHG. This is how much is affiliated to or assigned to Moptop as a company for the amount of emissions, how much percentage of ownership, it's this percentage. So the total amount is this much, and the percentage that is assigned to them is this much. But let's jump back to the consolidation so that I can walk you through it. So multiple models for planning, they integrate with the consolidation as well. Now let's get started with the importing of data. The first activity is importing data. Now we can have data sphere, SAP data sphere, to import data. We do the mapping on data sphere, or you can have multiple models on SAP Analytics Cloud, what we call staging models, and we do the mapping on them because we need to map from the different charts of accounts into the unified chart of account on the consolidation model. So it can be done either way, and it's a strategic decision. So for now, we have the import trial balance from staging models that we have created for this customer, because they have about 6 different sources and different chart of account, master data. We do the mapping on these models and push the data to the consolidation. Now, there is another thing that for a Japanese company, they have high volatility currency. So the Japanese yen is changing per day. This impacts only the P&L. So what we do is we also stage the data. We run the currency conversion using the native currency conversion table on SAC, because we're just doing the currency conversion for average, because these are the daily rates that are changing. And then we push the data into the consolidation model. So these are 2 different methods of importing data. One is local currency. The other one is local currency for the balance sheet and reporting currency for the P&L on daily basis, and then aggregated onto a month level in the consolidation model. Now, you also have input sheets, adjustment sheets, which can be the same, because the only thing you need to change is the control. The input controls. So if I click on the input sheet, you'll be you'll have the input sheet available. If companies would like to see their, if some companies, sorry, such as affiliates, that you have not integrated for automated data extraction from their source system, maybe you want them to input the data manually. But this can be a simple report as well. So the opening balance is the first sheet. You click on the opening balance, very simple logic to copy the closing year end of prior year to the opening of current year's months. So let me minimize this. Generate opening balance is a very simple logic that's going to copy these values from December 2022, okay, to the current year, which is on this month, it's February. Okay, no matter what I do, if I change the month to any other month, it's always going to take December, okay, and then it's over here March. So you only need to do this one time, just like in BPC. Copy opening is going to generate in the local currency from closing last year, December, to current year opening every single month. We jump to the next, and of course, there are some things that are consistent all over. You can change the themification. We provide these themifications, muted blue, so on and so forth, for the customer to choose, a different kind of an interface. So it becomes like so, okay? And there are multiple themes that we can integrate. So I'm going to go back to light because some customers love light. I prefer dark always. It's easier on the eyes for me. We went through this part, which is the opening balance. Second part will be balance sheet closing. So the balance sheet closing is what we have either imported or entered. We have the set of accounts, and these are the entities, and these are the local currencies of the entities. Now the data is being stored in LC, okay? But this is the local currency of the entity. And end users can either input or they have already imported the values. And this is actual data, okay? It's going to be stored on F99 for your reference on BPC. Then we can go to the profit and loss. And the profit and loss, like group reporting, we also have a breakdown per function area. So we have the accounts, P&L, broken down per function area, which is also a flow, simple. And then you have the total value for profit for the period, profit and loss for the period, okay? The data is always stored in year-to-date values on the data foundation. And of course, we can convert it to periodic on the data foundation or in memory. It's not a problem because we have this luxury in SAC, okay? Multiple measures, whether it's persisting on the data foundation or converted directly as a calculated number in memory. Now we go into the balance sheet per flow. Balance sheet per flow is now what we have. We've imported the movement. This customer has about 50 plus flows, movements. So we have the opening balances. Take a look over here. We have the total balance, okay? Total balance sheet. That's why you're seeing zeros. So it's all zeros here because it ties up. Then you have the addition, charges, disposals, so on and so forth, and the net variation that is calculated. This is done by triggering the calculation of the net variance, which is opening plus all of the movement minus the closing. The difference is posted on net variation, okay, like in BPC as well. There are multiple logics that can be used because what we do is we develop a script, an advanced formula, and you can assign it the way that you want. Okay, you can assign the first script advanced formula or the second or the third. This one is always going to be the same, just like opening balance. Unless you want to have the opening and the movement generating the closing balance, it's also a very simple advanced formula. We have the balance sheet intercompany. So like in BPC, you have the intercompany transactions. This is the entity. These are the partners. And these are the intercompany values. I have to expand this, expand. what I will do, I keep on saying I will change this because we were doing a demo for SAP. It's on the Learning Hub now. It's like a 2-hour live demo. And I also, if you go through the material, you would hear me say, I will fix this, and I still haven't fixed it. I just need to expand, and you can see intercompany loans to non-current and the current. Plus, here are the current. And I expand this. I will just change it so that it shows the base level members, and that's the end of it. It's simple. So intercompany transactions are being listed here. This is also imported from the customers' databases, from the customer source systems. Everything is actually imported here directly from 4 different systems. Profit and loss, same thing. It's a profit and loss. And then we have the investment intercompany, which is the breakdown of your investment. So we have nuts and bolts is the company, the holding company, and these are the subsidiaries with the investments and the subsidiary values and the total amount, which is also reflected on INON, just like in BPC. This one, it's their entry. They've entered it in this way without a breakdown of intercompany, fine. Then we have, let's say, architecture is the investor, and for real is the investee. Total amount, just one company, okay? And we have the list of these companies here. We also have dividend intercompany, which is dividend paid. So it's from the P&L, not payable and receivable, which is in the balance sheet, which is an intercompany elimination, which is very simple. And we'll get to these intercompany eliminations, investment eliminations. You get to see that the approach is a bit different than BPC because it goes on statistics in a way. I'll get to explain it later. Data preparation is the same thing. But instead of having the clicks only in the sheets, we have them listed here, opening, calculate flows, and generate the cash flow. The cash flow is purely advanced formulas. And it's the same input template, but we've broken it down here per sheet. These two can become one, simply put. But we kept data import because in the data import, you might want to change the data import to purely multiple buttons from the different source systems so that you import from source system 1, check the data, source system 2, so on and so forth. And there might be some logic changes that you want to look into, meaning not logic changes, mapping changes, right? So that's why we kept these two as separate. Currency conversion is where we start with the nice work. I'm going to close these. Okay. Now, when it comes to currency conversion on SAP Analytics Cloud, we only have average and closing. We don't have historical, we don't have dividend rates for currency conversion or a rate based on the purchase date of an entity or currency translation adjustments. So we want to create plus the currency conversion on SAP Analytics Cloud works on account level. It does not work on the movement level of the account. And we want to conduct the currency conversion on the movement level of the account. So just like in BPC. So we can click on add new currencies and rates. It's a very simple interface that enables us to create new currencies and new rates because it's a separate model on SAP Analytics Cloud, just like in BPC. And the logic is simple. So over here, we can add new currencies. It has to be a 3-digit currency. And you can assign it to a specific scope so that it can become a group reporting currency. So let's say I have all of these currencies, which is easy to create. If you access dimension, you will add them, simple as that. But you need to add the specific, let's say, attributes. Now, what's happening here is it's adding it to multiple dimensions at the same time with a specific set of attributes that are required for the advanced formula. So it's preferable to create it from here to have a very simple thing. So I can create, let's say, PAM as a new currency, click on create, it will create it in the back end. Okay, so simple, click, we created the currency, back end, and all of the attributes that are needed. Now we want to assign it to a scope. You can simply click on the scope. It will fetch the ID of the scope, the description, and other criteria, which is, let's say, the scope has a group reporting currency AED only. I want to add EGP or Euro as well. And I want to remove the AED. You just click on apply, it will update the dimension in the back end, and we're done. Okay, simple stuff. Now, a new rate is a nice thing. So on SAP Analytics Cloud, you only have average and closing. That is not sufficient to conduct financial consolidation according to GAAP and IFRS. So I can create a new rate, just like dividend, incoming, new, outgoing rate, these ones, and assign it to a specific flow, like in BPC. So over here, I can select F01. You can see that F01 has a rate INC, which is this one, incoming. Okay, so INC is assigned to F01. If I click on it, you'll get to see it will fetch me the flow that I clicked on and the current assigned rate, and then I assign one of these rates. So it's a one-to-one relationship. Okay, and you click on apply the rate, it will be applied and done. F06, just like in BPC, is for dividend. I click on it and you'll get to see it will fetch it. It's dividend, I can change it. I'm confining the end users or the consultants to an interface that is as fail-proof as possible. That's why we developed this. So now we have assigned the rates to the flows. Okay, we can go back and we can check the currencies and rate input template. So another thing that we need to create is not only should we have a custom solution for currency conversion because the one on SAC isn't sufficient, we also need to have global rates and specific rates. That is a scenario that occurred in my career because I've handled about 26 end-to-end BPC implementations by myself. And one of my customers had a company in Singapore, in Indonesia, and they have a rate that is different from the rest of the companies. So we need to have global rates that apply to all of the entities, and we need to also have entity-specific rates. Okay? So these are the entities, rate entities, and these are the entity-specific rates here. I'll show you how it works now. So we have rates per flow, as many rates as you want, per as many flows as you want, and we have entity-specific rates and global rates, okay? Now, this is the input sheet for the rates. We put a denominator rate. So over here, I'm going to go back to the global rate. So over here, Emirati, we have it designated as 1. Okay, 1 to LC, just like in BPC. And then we input the rates of the remaining currencies based on the relationship with AED. It can be any kind of combination. It can be USD is 1, and then you have to put the euros as a reference rate compared to USD. Okay? So here, one USD is, you can see 3.67, okay, is not the US dollar rate to Emirati. It's the opposite. So if I want to input how many, I'm inputting here how many Emirati dirhams is $1. Okay, I'm inputting here how many Emirati dirhams is 1 Saudi riyal, right? So that's the way it goes, just like in BPC. Going back to this part, we run the currency conversion, and we have two types of currency conversions. One which is fast, that will only read global rates. and a bit of a slower one that will read entity-specific rates and global rates. What will happen is it will read the global rates and omit the entities that have values on their entity-specific rate for that specific month, for that specific rate combination. So for the US dollar on ICCX01, the entity, it will omit it in the global rate currency conversion, and then it will pick up these values, okay, to convert based upon them for that specific entity. So it takes a little bit more time, and that's why we separated them, because this scenario is very scarce. We don't get to see entity-specific rates in the majority of our implementations, even in BPC. Now we'll take a look at the report, and this is where things start clearing up a bit. And you can run also the rates from here, entity-specific and so on, clear the data and remove the zero records so that you clean up database. So we have over here the converted values, and the AED is the currency of this entity. This is the value in Emirati dirhams, not local currency, because this is the local currency here, converted on a one-to-one basis to the local currency of the entity, which is AED. So we have AED. In euro, you can see the values, and USD. Now it's using the global rates and the entity-specific rates. In reality, for ICCX01, which is dewdrop N, it's referring, when it's converting to US dollar, to the entity-specific rate, okay? Using average closing, dividend, and incoming. Let me show you a little bit of a breakdown so that you see the movement. Now we can take a look at the movement. I will just expand maybe this one. Okay. So the opening rates are the closing rates of the prior year, always. Okay. Then we have the incoming rate. For additions, the movement addition, it's using incoming rates. So if I go back, it's going to be using the incoming rate from here, okay, to conduct the conversion to any of these currencies. You can have as many as you want, okay? So incoming rate, the addition is using incoming rate. The remaining are using all of these average rates. So it's going to refer to the average rate of that, from that global rates. Then we have the currency translation adjustments, and it's always going to be calculated in a specific formula, because the currency translation adjustment is an accounting entry. So the formula is consistent. We can change it if some customer has a specific currency translation adjustment, which is weird, but according to the accounting and finance way of conducting CTA, it's just a simple formula. And then we have the closing rate, which is going to be picked up from, as well, the closing. Okay, this is what the customer required, and we, of course, reconciled, and the values are perfect. And you can see it per each and every entity, per each and every account. Plus, the last point that I would like to mention, the currency translation adjustment, it's not plugged into one account. It's for each and every account on a specific flow, which is the F80. It conducts the currency translation adjustments. Okay.
Thank you.
So standalone reports, we have a bunch of standalone reports. I'll skip that because you can develop as many as you want. It's not something. It doesn't require any advanced skills to develop enhanced stories on SAP Analytics Cloud. Intercompany matching. In this case, the customer requires intercompany matching. The intercompany matching is a separate model that allows the subsidiary to see what has been posted against it by its partners. So they do the intercompany reconciliation intercompany transaction or reconciliation among themselves. This is prior to financial consolidation. This customer requires it. Some customers actually don't require intercompany matching because the consolidation happens in the head office directly. So if there is a consolidation manager running the consolidation for all of the entities, this consolidation manager can see everything already. So sometimes intercompany matching isn't needed. But for this customer, they have multiple levels of consolidation and they have assigned consolidation managers, 6 consolidation managers for the subsidiaries and 1 at the head office. So they want them to conduct the intercompany reconciliation among each other. So if we click on, I think this one, and this is what has been imported. So there are 4 reports here, okay? What has been imported from the consolidation as is, and then the reconciliation. SFP is financial position, statement of financial position, which is a balance sheet. So we click on the SFP reconciliation, and you can see, let's say, this is actual data, so you just need to, yeah. Let's take a look at these 2. 1 and 2, okay? Now, due drop in has so we have in the headers, their liabilities and expenses, what their liabilities and expenses are, and my assets and income. So basically, this is what they have posted in their books against you, okay? My liabilities and expenses is my books, what I posted in my books. Their assets and income is what they have posted in their books against me, so that I can see it and reconcile it. So over here, due drop in has against Dust Bunny. So this is the entity and this is the partner. A trade payable of 599 in my liabilities, right? In my books. And I know in their books, because now I can see their books, what they have posted against me, they have trade receivable, okay, as an asset or income in their books. So these 2 values match. Now, this is what due drop in can see. Now, on the other hand, due drop in and Dust Bunny, okay, names. These are names created by ChatGPT. We told it, change the names, make them funny. Now, Dust Bunny maids, this is the subsidiary, this is the entity, and due drop is a subsidiary, the partner, okay? So in the books of Dust Bunny, we can see the following entries. Their liabilities as trade payable is 599, and my assets are 599. So Dust Bunny can see what due drop in has posted against them, and due drop in can see what Dust Bunny has posted against them. Now the game is the following. What does the customer want? Do they want us to show them the difference as greater, less, or buyer? So the logic is, if there is a change, if there is a difference, where do they want us to post this difference as not posted, indicated? For this customer, there's another report that I'm not showing now, which is a parenting. What we'll do is it will check the difference between these 2. And if there is no difference, 0. If there is a difference, it shows a number. So it's an OLAP, parenting only. That's what they wanted. They wanted parenting, which is completely different than BPC even. And it's a very simple solution. In fact, this customer, if I go back to data preparation and balance sheet movement, the movements constitute the cash flow statement. So they wanted to have 2 types of cash flow statements. One which is purely the flows, okay? So based on the flows, they generate an in-memory cash flow statement. And based on calculation formulas, they generate another cash flow statement. So these are just like additional things. Now we go to ownership, which is where we start some fun. You can manage the scopes here by creating new scopes and assigning the relationship, editing these scopes, deleting the scopes. So you can edit existing scopes. You'll get to see a list of all of the scopes. I'll click on one scope. It will show me where it belongs. What is its parent scope? This one has no parent. I'll get to see maybe, okay. Now this is a scope that has a parent, okay? And these are the group reporting currencies for the scope, which can be also influenced in the currency interface. You can also enable staging, but you have to assign a staging entity and a staging audit trail. Staging is not aggregating and placing the data on a scope only. It's a method in which we consolidate directly owned companies and indirectly move them all up to the upper scope. And then the directly owned with the intercompany indirect transactions of the lower scope, plus the remaining consolidation. So it's a little bit of, it's not staged for reporting purposes. It's a method of consolidation, okay? Now we can edit existing scopes, create new scopes, input, ID, description, assign the parent if you want, and assign the currencies, and then determine whether you want to enable staging or not. For now, we don't have, we prefer to go with no staging for now, but there is a logic for it. Let's consider that I concluded this part, okay?
Thanks.
Let's jump to the ownership. The ownership is another custom interface. And you can see over here, these are the scopes. And these are the entities that are directly owned under the scope. So if I click on grass group, these are the two entities under grass group. However, it will show me the directly and indirectly owned entities here. This interface is going to be enhanced a bit to look like this one. Yeah, it's going to look like this one a bit with the text and these things. And there will be a bit more configuration for the color and other things. But we parked it for a bit in all cases. So I clicked on grass group. And grass group, you can see there are two directly owned entities. But since it's a parent to bunch of business, hands up, scope one, and hands up is a parent to Do-Re-Mi, and bolts, this, so on and so forth, you can see how far down it goes. If I click on hold on type scope, there are two directly owned entities, right? And the indirectly owned entities, since it's a bottom scope, there are no indirectly owned entities. Now, if I want to see counting sheep where it exists, if I click on an entity, it will show me in how many scopes it exists. Okay, so it's showing me it's part of clutch, a state of play. All of these are scopes because it's going to be rolled up to the parent scope based on the scope parent-child relationship. Okay, so let's go back to hold on tight, scope 4. And it has counting sheep, it's the holding company, and poor choices, it's the subsidiary. And it owns it by 100%, and the ownership rate is 100%. So there is no NCI. Now you can change the ownership type or the consolidation method to none. We have a logic for none for specific cases. Holding full and equity, these are the typical ones that we use. Proportionate is not going to be used, but we have the logic for it. And oil lifting is a specific scenario for one customer for oil lifting scenarios, meaning that an oil and gas company, they own a company by 80%, but we need to indicate the oil lifting percentage to conduct specific calculation. So oil lifting is just for specific scenarios. Now, when the percentage changes, I don't need to do anything. I don't need to write partial liquidation, partial acquisition. Because what the logic is going to do is it's going to check the current time and the prior periods. What's the difference between 100 now and the 95 that I had before? It's a 5%. So it will take it and place that 5% on a specific flow, F91, sorry, F01. Meaning I'm acquiring 5%. Was 95, now it became 100. If it was the opposite, there is an if statement, simple if statement. If it's the opposite, now it's 100, sorry, before it was 100, and now it's 95, then it will take that 5% difference, reduce it, and place that value on F98. Simple as that, okay? If the current period is less than the prior period, it places it on one flow. If the current period is more than the prior period, it places it on a different flow with an inverse value just to reduce the values. So, and then you have the consolidation method. If the consolidation method was full, sorry, was equity and became full, then it will start posting on F50, I think, the difference, which is now it became consolidated fully. Before it was equity method of consolidation. So it's going to place the differential between the two on a specific flow. Okay. This is the scope change treatment. And now, if I click on, let's say, this one, grass group, it will show me all of the directly and indirectly owned companies. I can add an entity. So I just simply click on add. I'm not going to do it because it's a customer's system. It's a demo, but still. So we just need, and this interface will be enhanced with a little bit more design. Don't worry about it. So these things, we can add them and they will become directly, let me click here. They will become directly added to the scope. So you can see grass group now has, okay, it does a few refresh. That's a different thing. Fine. So now we can see all of these entities are now part of this scope as directly owned companies, right? Of course, I can simply put revert data. If I click revert, just like in SAC, it will revert them. And we're back to this value. There are other enhancements that we're creating. We want to create a visual network for the ownership, some visual candy, you know, it never hurts. So adding new entities is easy to a scope, and you can have it per version, and you can have your own private version for it. Don't forget that you can have private versions native to SAC, but we also simplify it from here, meaning I want to create a private version to conduct my consolidation on my private version. That is also, since it's part of SAC and we have the solution native to SAC, then these features are all there, you know? So we're utilizing SAC's platform, software as a solution fully. Now we can manage scopes. You've already seen managing scopes in the other interface. This one is a pop-up interface, same functionalities and features. If you want to add a new scope, assign it to a parent, assign the group reporting currencies, so I can create a new scope, assign it to whatever grass group or none, doesn't matter. I'll add new scope 333, let's say, okay? And I just click on create. It will create it and assign. You get to see it somewhere down, maybe. This is the one that was created, new scope 333. There are other things, the methods, you can, over here, we don't change the methods. We keep them as is, okay? But if you want to add methods, you can add method. You can prepare staging for the to conduct staging method consolidation. and calculate if there is some kind of a mistake here for some cases. Let's say something happened. We can re-trigger the calculation all over again to, let's say, fix the ownership structure. Of course, the ownership structure is per month. So per month, these will change, okay? Over here in August, brick, blah, 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 has data. In December, Bricker Real Estate has no entities. All of them are out. And of course, you can change the muted blue to charcoal to whatever you want. And then we jump to the consolidation. You can run the consolidation from here, which is usual consolidation, or the staging method consolidation, which takes more time. And you can check out any of these dashboards and stories. So let's say elimination detail or financial reporting pack. I'll close this one. These are simple stories, but they have an overview of everything. So this is due drop in, okay? What was the inputted amount, the elimination of intercompany, elimination of investment, elimination of equity accounts, non-controlling interest, how much, and then you have the total. Now, there is a month and a scope that has a problem from their side, from the customer's side. I don't know which one it is. Let me just double check one thing. Yeah. If I imported, I'm not sure if this is going to have data. Yeah, it has data. So on December, maybe the data was better for them because that's related to them, by the way. Okay, but we reconciled the financial statements as is with BPC that is being also audited by KPMG, I think. Things are working. So per entity, we have the report, and this is for a specific scope, which is scope 2. Okay, and you can see each and every entity, the entries, eliminations, non-controlling, hedging reserve in some cases, and there is shares and earning as well, and dividend paid elimination with an impact on the equity side and the investment side. So plus you have the central dashboard, the one that I showed you earlier, and other dashboards that have specific set of functionalities that basically provide almost everything that is needed. You want to turn it into an input or not, export, bookmark, private or public, settings for all types of settings on the report, run any kind of data action trigger. And there is one data action trigger, which is a multi-data action trigger. Click, run everything. This is the library for, let's say, online material. And then we have the simple graphs. And this one as well here. We have some also other graphs, but no data for this one. I'll go back to the reports. And of course, you can change anything from here. Okay, from balance sheet to profit and loss to financial cash flow statement, sorry, any type of time. Then you can check out the budget. If there is latest forecast 1, 2, and 3, you will see them being added here. And we're only looking at closing. If we change to the profit and loss, you'll get to see P&L and the function areas that we have broken down the P&L before on. Last part is the journal from the front end interface. So we have a journal entries template, and you can post entries using this journal and report on entries, debit and credit value for adjustments. And the journal is a nice interface, a little bit slowish, because remember that I have a demo system. Now you can create journals, you can park the journals, you can post the journals. That's an additional JavaScripting capability that we added. And posting has to be by a person that is part of a team, the journal manager team, by natively, I mean, part of the system. So I can click on Find Journal, and you can see all of these journals. You can see this one is locked, okay, and it has been posted. So the debit values are shown here. The credit values are shown. The saved value, which is saved in memory, right? And what has been posted is this number. So if I click on View Selected Journal, it will start populating the back over here with the entries. And it's going to change the context based on how this journal was saved. And it's applying filter on 2 reports that we will get to see now here. This is just refresh. There is nothing to it. It's refreshing data, right? It's taking time. So actual, it was posted on actual category in local currency for a specific date. S-non, not consolidated, so standalone, on a specific audit trail member. Now, this audit trail member has a configuration interface. We have a configuration interface where we configure the solution. So this audit trail member, or all of these audit trail members, are allowed for posting journal entries. And that is configured from the landing page. You can go to the administrator and click on audit trail, let's say configuration, and start configuring the audit trail dimension from this interface. And you just need to select the audit trail members, assign them as manual adjustments, and apply DS type settings. Then in enable journals, you will see them listed here, and you will say that these are journal enabled. Okay, because you have manual adjustments, meaning in the data source type, manual adjustment can be from the Excel report, Excel interface, or the web interface inputting manual adjustments. But from these manual adjustments, we can also dictate which ones are only through a journal and which ones are not, okay? Because we might want to have a specific additional configuration, whereas the adjustments are only posted by the consolidation manager or the journal manager. Okay, the remaining audit trail members, it can be open for adjustment for whoever we assign based on data access rights, and through the locking mechanism as well, which is native to SAC. So let me go back to the journal entry interface. So this list is determined from this interface, and from this interface. And I'll get to show you how when we go to the models. And you can take a look at the entry. You can see the entries that were done on the journal model because they are first posted on a journal model, and then their deltas are posted on the consolidation to affect the residual values. So journal, there are other things. You can export, do whatever you want. You can edit the journal, unlock the journal, unpost it, post it, delete it. The rest, just like a typical journal. So you can unpost the journal, take a look at the values here. I click on unpost. They will be unposted, and this value will become empty, okay? Because first it posts in the journal model on a specific measure, then it reflects that value in the consolidation model, but doesn't overwrite existing values, okay? So you can see this one became orange or yellow. If I just click here, refresh data, you'll see that all of this is empty. There are no entries. I can click again, post the entries. It will post them on posted in the journal model, and then their deltas will be placed in the consolidation, not overriding existing values, changing the existing values based on the deltas from here, okay? So proper treatment of a journal logic. And you can see the posting has been done. You can import mass amounts of journal entries. You just need to have an Excel sheet, fill it up in this form, copy paste, click on import, and it will populate your journal interface, okay, which is this. And of course, you can click, select any entity, okay, or write the value, and you can have additional entries up to 50. We can increase that. Basically, that's a journal interface, which is typical to BPC. Let's jump to, this part. So we've covered all of this. So there is also reports for journals that are different, nicer. There is EPM style reporting, many functionalities here, okay? Plus, we're going to be rolling out this interface, which is the consolidation monitor. If you select the scope, it will give you the specific set of activities. If you select an entity, it will also give you a set of activities. This has been waiting for a while, plus controls, a control interface that does the checking based on a formula that you place in the JavaScript, and just a memory calculation, actually. Let's jump to configuration. In the configuration, I'm going to keep it because I'm taking too much time. We already went through currency and rate configuration. You saw that. Scope configuration, audit trail configuration, I showed you a little bit. So in the audit trail configuration, you assign data source types, whether it's input, manual, or automated. Journal type, it will give you a subset of everything that is manual. You assign whether it is journal enabled or not. Copy opening, what are the audit trail members that are subject to the copy opening logic? What are the audit trail members that are subject to conversion, currency conversion, to consolidation, and whether they are staged or not? I don't have it here. We will delete it because it will be just part of the consolidation interface, not the audit trail. Last part is system check and referential integrity. Over here, we conduct specific system checks. It's just to see if there are flaws in the configuration of the consolidation system, and it gives you reports in this manner. In some cases, let's say this one, admit, we conduct a check. It shows me entities with entity-specific rates and entities with invalid entity-specific rates. So if there is something here that is reported, then I have to check it. And check for missing currencies. It will also conduct a check for the missing currencies. I can filter based on this, run the checks. There is nothing missing here. Flow and rate relationship. I can check for rate assignment per flow and indicate any issues. Flow without any rates, which is the proper thing. Opening and currency translation adjustment should always be. So this is correct. The ones that are assigned the rate are correct. Flows with an invalid rate dimension, there is nothing. Okay, missing currencies, no assigned rates for these. Audit what is assigned, and it gives me, this is all JavaScript with concatenation, reading from the back end, doing some logic that I've written. So I start filtering based on data source types and other things. Filter based on console, yes. Gives me data source type is manual and translated, other things. I'll go through them, but not in this session. This is it for the configuration of the account. Now, last part, configuration of the account. You cannot configure from the front end the account dimension, right? Or the entity dimension. So it gives you a guide. Now, how does it do consolidation? Just to give you an example, I'm going to jump directly to the models and just show you how it actually works. So the consolidation is limited, and meaning naturally it isn't an infinite possibilities of eliminations. You're either eliminating the intercompany, reducing it from the total, and showing the difference on the clearing account. That's a 5-leg entry. Or you're eliminating in the P&L the intercompany, reducing it from parent, then impacting the 2 legs of the balance sheet. That's a 4-leg entry. Or you're eliminating the investment based on the breakdown, right? So the breakdown of the investment from the total and then reflecting it on a clearing account in an entity. So that's a 3-leg entry, and so on and so forth. So it's based on legs to us. And then you mix and match based on this logic with the combination of the accounts that you want to inherit this treatment. So if I go to financial consolidation, models, and then I click on consolidation model, and I jump to the account dimension, you'll get to see that it is like BPC, but even nicer, because we can assign the audit trail to the account dimension. So we have a cascading method of consolidation, which is something beyond BPC's capabilities. And that's native to SAC. So I'm going to select the consolidation. No, descending. Okay. Forget the KPIs because these are different. Now, over here, I have the elimination code, which is just like in BPC, co-ICIS for intercompany of the P&L accounts. Now, there are multiple clearing accounts you can see over here. So it's going to eliminate all of these accounts using this elimination code, which is an advanced formula. And it's going to assign their values, the difference between the values on these clearing accounts. And the elimination will happen on ELM interco. Now, if I want, I can assign a different elimination member. So this has to exist in the audit trail dimension. If ELM interco 2 exists in the audit trail dimension, then it will conduct the elimination and post the value on the ELM interco 2. Now, in BPC, every rule was audit trail specific. So you had the general sheet, you stated the elimination should happen on the specific audit trail member, and then you create, you in the other sheet, in the other tab, you have the accounts and the flows and whatnot, and you create the rule with the method multiplier. Over here, it's a bit different. Over here, it's simplified because SAC has, to me, more capabilities. So I can have one rule for multiple audit trail members. And for me, the rules are limited, right? Because the relationship, the elimination of equity accounted companies is not really elimination. It's just picking up the portion of your net income, portion of your retained earning, and revaluing the investment. That's it. So it's consistent regardless of whatever. Just the accounts are there. And you're just picking up these values. Now, the real work happens with subsidiaries and holding companies. But the possibilities are limited. The accounts differ, okay? The assignment of these clearing accounts with the audit trail member and codes differ. But from a statistical perspective, is it 5-leg elimination, 4-leg elimination, 3-leg elimination, so on and so forth, and then connecting them to each other? Because in some cases, the clearing account is an actual account that will receive the portion of the value. So it will always work. And for the customers, I base this implementation based on the 26 end-to-end BPC implementations. I don't see any problem so far. Of course, there might be some specific configurations, but we can always, if I've developed all of this, it's going to be very easy to develop one additional part. Now, also audit trail, you can see you're very familiar with this interface. So audit trail member, perform, carry forward, data source type, enable, so on and so forth. These were configured through the interface that I showed you, and so on and so forth. You have all of the dimensions, flow, interco, scope, entity, and the rest, right? I think I'll end here with the demo, or I'll just show you. We have data action triggers for all of these data action triggers, and we keep on adding, okay? A lot of data action triggers. 90% of the data manipulation happens on data action triggers. There is some JavaScript. When you add a company in the ownership, some logic happens in the JavaScript quickly, so it assigns amounts in the ownership model instead of you punching them in. That's all. The rest is carried through with advanced formulas. Currency conversion, consolidation, journal posting, unposting, the whole thing happens in advanced formulas. And the advanced formulas are we start with, let's say, 90 lines, and we shrunk them down to 30 in some cases. So it's very lean and it's very beautiful. And it runs 13 seconds for 400,000 records. And I have a demo system. So it's nothing, okay?